Ray Dalio owns an incredible 877 stocks in his Bridgewater portfolio worth $19.15 billion. In this video, we're covering his top 10 biggest positions, starting with number 10, Walmart. Dalio bought his latest stake in Walmart at the end of 2020. More recently, in 2023 and 2024, he sold in 7 of the last 8 quarters. Walmart is the $661 billion US retail giant. Today, after a stock split at the beginning of 2024, it's trading $20 above its 52-week lows and at its all-time highs. Walmart's owned by 4 other super investors, and that's actually led by the Bill and Melinda Gates Foundation Trust. In recent years, their stock price has soared since 2015, and when we go back to when they were publicly listed, they're one of the top compounding stocks in history. Walmart's been a slow, steady, and sleepy growth company in the last decade. While their sales are up, recently their cash flows and earnings are about the same as they were 5 years ago. On top of this, they earn just slightly above average returns on capital. The best thing is that Walmart's returning a lot of money to shareholders. They've repurchased their shares in 9 of the last 10 years. And Walmart's a dividend king. They've grown their dividends every year for the past 51 years. That's over half a century of dividend growth, including 9% last year alone. The big knock against them is their valuations. Today, Walmart's way ahead of almost all of their historic values. That's why their guru-focused value today is only $57 per share, down $25 from their current stock price. Their cash flows suggest Walmart could take a haircut of nearly 47%. But analysts want to see the stock trade higher and have an $88.50 price target. Next, at number 9 in Dalio's portfolio, we have Johnson & Johnson. They're another dividend king, but instead of selling in the latest quarters, Ray Dalio's actually bought 3 quarters in a row. Johnson & Johnson is the $385 billion pharmaceutical giant that trades just $7 below their 52-week high. They're trading near these highs even after their recent spinoff of Kenvue, their consumer brands company. Johnson & Johnson's owned by 11 other super investors, and this is led by the Ariel Focus Fund, who has 3% of their portfolio invested in the stock. While they've been a great performer historically, in the past decade, Johnson & Johnson has actually lagged the S&P 500. This comes even as they're a very steady and stable company that earns above average returns on capital and generates a lot of cash. As part of that Kenvue spinoff, they received a dividend that they used to buy back almost 8% of their shares in 2023 alone. Right now, Johnson & Johnson pays a huge 3.13% dividend yield that they've grown 62 years in a row. They increased this by 4.5% last year, and they're one of the few AAA-rated debt companies in the world. Compared to historical values, J&J looks like they're trading above their earnings or free cash flows, but they're below their historical sales. Their cash flow numbers look like the company is around fairly valued today. Analysts want to see it trade slightly higher with a 9% upside. Ray Dalio's a legendary investor who founded the world's biggest hedge fund, Bridgewater Associates, out of his apartment in 1975. He's used time-tested strategies to outperform and endure even during periods of tough market fluctuations. His investment strategy and philosophy is geared toward reliability, diversification, and long-term value no matter what the market condition. Dalio's also a famous author with his works Principles, Life and Work, and his newest book, Principles for Dealing with the Changing World Order, Why Nations Succeed or Fail. Dalio was the CEO and Chief Investment Officer at Bridgewater for more than 47 years before announcing that he would step down in 2022, though he still maintains an advisory role with his company. Dalio's next stock at number 8 is Meta Platforms, the parent company of Facebook, Instagram, and WhatsApp. Dalio loaded up on the stock recently with an average buy price of $241 per share. The company's trading more than double this, and he trimmed slightly in the last quarter. Today, Meta's a $1.5 trillion business that's up more than 5 times from their lows back at the end of 2022. 25 other super investors own Meta, and this is led by Rob Vinall, Chase Coleman, Pat Dorsey, and Terry Smith, who I just covered in a video also. Meta's back to being a growth story after this seemingly stalled in 2022. Today, they're posting record high sales, earnings, and cash flows, and they're also earning high returns on capital. Even better for shareholders, they've returned a lot of capital in the last 5 years. This has really ramped up through recent stock buybacks as much as 5% in 2022, and the fact that Meta's now paying dividends to the tune of a 0.36% dividend yield that they started in 2024. Meta's valuations seem to look better than Walmart or J&J, but they're definitely toward the high end of their historical ranges as well. Trading at that high end is why a GF value comes in at around $400 per share. That's down a whopping $160 from their current stock price. This is partly based on their cash flows, which are projecting an 18% downside. Analysts see an increasingly bright future for the company with a 10% upside. If you're enjoying the video, would you consider supporting the channel? Click the link in the description below for Interactive Brokers, Global Value's affiliate. Just by doing that, you keep the lights on and help make videos like this one. The next stock at number 7 in Dalio's portfolio is Microsoft, where he owns $447 million worth of their shares. He's also been buying big stakes in the last 2 quarters. Microsoft's one of the biggest companies in the world with a $3 trillion market cap that's trading just $50 below their 52-week highs. They're the second most owned stock by investors, and this is no surprise, led by the Bill and Melinda Gates Foundation Trust with nearly 33% of their portfolio in the company. For most of their history, Microsoft's crushed it as a stock. They were a darling from their IPO until the late 90s, and then from there until 2012, things didn't really move anywhere. However, in the last decade, they're one of the top performers in these big cap tech stocks. There's a lot to love in Microsoft's numbers. They've seemingly climbed higher each and every year since the early 2010s. This includes their sales, earnings, and cash flows, and they've earned above average returns in the majority of these years. They also bought back shares every single year except for 2023. They've actually diluted shareholders since then. Even with that shareholder dilution, Microsoft's a dividend growth stock. Today, they pay a modest 0.82% dividend yield, but they grew this by 10% last year. On top of this, they've grown their dividends 19 years in a row. Their valuation numbers are the other side of the coin looking at the business. These are trading well above historical averages. Microsoft may be a wonderful company as coined by Warren Buffett, but today its cash flows look like there's an 8% downside from their current stock price. Analysts are much more bullish on the company though, with a 21% upside from here. We'll see how this plays out. Amazon's up next at number 6, and Bridgewater's bought their stock in the first 2 quarters of 2024. Another big tech giant, Amazon has a $2 trillion market cap and is trading nearly at its 52-week and all-time highs. Amazon's in the portfolio of 24 other super investors, and it's the 5th most owned super investor stock. This is led by Josh Tarasoft, who has nearly a quarter of his portfolio in the company. As one of the top performers in the past decade, they surged during the pandemic. Then things came crashing back down in 2022. Since then, though, they've gone right back on increasing, and their stock price has doubled from their lows. Amazon's consistently grown their sales in the last decade, and they're back to having growing operating cash flow as well. One thing to watch for is growing amounts of stock-based compensation, and Amazon's added on debt to where they no longer have net cash on their balance sheet. Valuations also matter here, with Amazon trading above their historical sales numbers valuations and way above their earnings or their cash flows. That's why a GF value is $161 per share, which is down 21% from their current stock price. However, analysts see a 15.5% upside, with only one having a sell rating. Stock number 5 is another old reliable dividend growth stock, and this is Procter & Gamble. Notably, Dalio's sold out of this stock in 8 of the last 9 quarters. He has an average purchase price near their 52-week lows, which they're trading $20 above. The consumer goods company has a huge $389 billion market cap, and surprisingly, that's the smallest company we've looked at so far. 7 other super investors own Procter & Gamble, with a 4 and a 3% position from Yakman Asset Management and Terry Smith. After a great historical performance, especially since the 1980s, they've more or less just kept pace with the market in the last decade. It's another stable and steady business that's been just low or no growth in the last decade. Still, they earn decent returns on capital and generate a ton of cash flow. Most of this they return to shareholders through their buybacks and their dividends. Procter & Gamble's a 68-year dividend king. Today they have a market-beating 2.44% dividend yield that they increased by 6% last year. Sounding like a broken record, it's again their valuations that get them into trouble. They're trading above their historic. Still, given the reliability of their business, a GF value comes in pretty close to their current stock price, just down $5. Stock number 4 is the most hyped stock in the last 2 years. It's Nvidia, and Dalio owns nearly $900 million of their stock. Last quarter was the first time Bridgewater sold after buying the previous 3 quarters. Nvidia is the second biggest company in the world today, trading just $8 below their 52-week high, which is up more than 3 times from their 52-week lows. 8 other super investors own Nvidia, with a 7.5% position from the Mares and Power Growth Fund. There is no more impressive company in the market with their stock price up more than 11 times from their lows in the last 3 years. With a huge growth in demand from AI and a shortage in supply in the GPU market, their earnings, cash flows, and sales have gone through the roof in the last year or two. This has led to them having insane returns on capital, which were already really good, and a huge amount of cash. The problem is that this is way better performance than any time in the rest of their history, and they're to the point where the math just seems to no longer make sense for the company. They're trading at an insane 35.5 times sales. Normalizing their cash flows could mean their stock price falls by more than half, down to $58 a share. But that's no threat to analysts who again are incredibly bullish with a 25% upside from here. The third biggest holding and the biggest stock in Bridgewater's portfolio is Alphabet. They've gone back and forth on this stock, buying it in 14 quarters and selling it in 15 quarters in the past 15 years. Alphabet, the parent company of Google and YouTube, is the tech giant that has a $2.1 trillion market cap. Today, it trades just $20 below its all-time highs. Alphabet's also the most owned super investor stock, with the Chinese Warren Buffett Li Lu having the largest percentage of his portfolio invested in the company. Their numbers look pretty incredible. They have strong sales, earnings, and cash flow growth, a strong net cash position, and well above average returns on capital. Even better, they're returning money to their shareholders with big buybacks in the last 5 years. And in 2024, Alphabet, like their peer company Meta, started paying dividends. Right now, they have a 0.48% dividend yield. Alphabet seems to trade much closer to their historical valuations than many of their other big tech peers. Today, this means that their GF value comes in at $164 per share. That's down just $4 from their current stock price. Their cash flows, though, suggest a 17.5% upside from here and more than a $200 current fair value. Analysts are even more bullish than this, with a $220 target price and a 28.5% upside. Now, Dalio is known for diversification, and he takes this seriously with his top 2 holdings. The first of which is the iShares Core Emerging Markets ETF. This is a $1 billion holding that he's actually sold out of slightly in the last 3 quarters. Like the name suggests, this fund invests in emerging markets. Its biggest holdings are Taiwan Semiconductor, Tencent, Samsung, Alibaba, and Reliance Industries. Much of this concentration, as you can see, is weighted in Chinese tech and Indian companies. Altogether, it makes up more than 6% of Bridgewater's portfolio. The top holding in Dalio's Bridgewater hedge fund should be no surprise for his longtime fans and followers. It's the BlackRock iShares Core S&P 500 ETF. Since first buying in 2017, he's bought shares in 18 quarters and only sold in 9 quarters. This is something he's consistently added to over the years. On his overall cost basis, he's up more than 75%. With this as his top holding, he's double dipping into some of the other top 10 stocks in his portfolio, notably Microsoft, Nvidia, Amazon, Meta, and Alphabet. Apple has a 6.6 weighting in this ETF, but it wasn't in Dalio's top 10, so that's where he's underweight in these core stocks. Now, these are the top 10 holdings in Ray Dalio's Bridgewater Associates. If you made it this far, be sure to like the video, share it with your friends, and subscribe to the channel for more.